So we'll read this question. The following data relate to units. Raw material used is 25,000. Direct labor is 22,000. Machine hours worked is 10,000 hours. Machine hour rate is 2.2. So that is like per hour. So this should be per hour. Admin overheads is 15% of works cost. Sales overhead is 0.6 per unit. And units produced is 22,000 units and units sold is 20,000 units at a price of 8. So we have to prepare cost sheet showing the cost, profit and cost per unit. So we have to find out the cost per unit. So let's start here. So the raw materials used is 25,000. So here we have this 25,000 directly here. And I think we can put it in the outer column itself. Then we have direct labor, which is 22,000 amount. We don't have machine, we don't have direct expense, so we can directly find out the prime cost, which would be 47,000. So that we can put outside. And machine hour rate. See, machine is used in factories. Okay, so that would be the factory expense. So factory expense is 1,000 hours into 2.2 is per hour for using the machines. So that comes to 22,000. 2,200 it comes to. So we don't have any opening WIP and closing WIP. So directly it comes to 49,200. So it would again put outside. So the next item is admin overheads. So admin overheads is 15% of works cost. So this number is 15% of works cost. So works cost is, see, this is the works cost. So it is 49,200. So you can simply copy this and paste it here. And we can get the answer. Right? So the cost of production comes to 56,580. So that number we can also put outside. And do we have opening finished goods and closing finished goods? Okay. See, the question says that we have produced 22,000 units, but we have only sold to 20,000 units. That means 2,000 units have not been sold, right? 2,000 units have not been sold. So 2,000 is the units not sold. And for that, we have to find out the value. So what would be its value? Okay. So that's where finding out the cost per unit is useful. So if you see, we have totally produced how much? 22,000 units, right? So this would be the material cost. This is the prime cost per unit, factory cost per unit, and cost of production per unit. So cost of production per unit is 2.57. That is the per unit cost. So that amount we can take and we can put it outside. So that would be equal and minus. As closing stock is a lessing amount, we have to put it as a minus number. So what is the total amount of cost of goods sold? That would be 51,440. And sales expense is given. So sales expense is 0.6 per unit. So how many units we have sold? We have sold only 20,000 units. So 20,000 units into 0.6. So sales expense comes to 12,000. So add both these, you get 63,440. And finally, we can find out the profit. So units sold is 20,000. 20,000 into per unit is 8. So our profit is 1,60,000. So the balance amount, so it is going to be a balancing figure. So the profit would be sales minus total cost. So this is our key number. So the balancing figure. So this is our profit here. Okay. So we could still find out the per unit items everywhere. So we can find out the cost of goods sold, we can find out, and the total cost also we can find out. So okay, so why how can, like, here it could be like 2.57, okay, how can it be like 2.3? Because we have wrongly taken 22,000, we have to take only 20,000 of units sold. So both these numbers will become similar numbers, and here the total amount of total cost is for 20,000 units. So this number comes to 3.172. So ensure that you understand these numbers properly. So if you want, I'll put it here. It is this number. So how did we compute? This is 25,000 divided by 22,000, right? So that's how we found that. And here it is 47,000. Here it is 49,200. Here it is 50, 56, 58. Here it is 51, 440. Okay, and last one is 63, 440. Okay, so this is the working. So these are the working notes, right? So that's about this sum. So hope you got the idea here. So it's again similar to the same cost sheet, okay, but each sum has like little bit small differences here and there. So we'll move on to the next sum. Next sum is sum number 5, and we need the cost sheet. Okay, so here we have the following data. The following is the data for the supply of 3,000 units of a product. Direct materials is 20,000 kgs at 4 per kg, and direct labor is 10,000 labor hours at 40 per labor hour. Factory, we have like variable cost. So variable cost is something which moves with the per unit produced or per hour. So factory hours is 5 rupees per labor hour. So labor hours is here. Okay, variable is again selling price per, not selling price, selling cost per unit should be 15 per unit. Fixed cost is again 1,50,000 for factory. For office it is 1,75,000, and profit, okay, on cost is 25%. So again, this is a simple kind of a logic. They also want the cost per unit. So we'll start. See, the only difference between this sum and the last sum is they have given like breakup for all the numbers. So we would be required to do the workings also. So we would be like required to do the workings. So that's only extra element here. So direct materials is 20,000 kgs we have purchased, and the price of it is 4. The next one is direct labor. So direct labor is 10,000 into 40. Next one, direct expense we don't have. We have variable cost. So variable cost, one of it is the factory overhead. Okay. So in factory overhead we have like two things. One is variable cost, and the other one is a fixed cost. We have two elements here. So variable cost is 5 rupees per labor hour. So this is going to be 5, and fixed is going to be 1,50,000. So that's like directly given. So next is going to be we have selling expense. Selling expense is 15 per unit. So totally we are selling how many units? So is it given? Yes, it says for the supply of 3,000 units. So they're going to sell 3,000 units. So this is going to be the sales expense. Okay, so we have done till here. This is over. Office expense, we can put it as administration expense. So that is going to be 1,75,000 units, 1,000 rupees, and that's it. We can get the last number. Okay, so let's get the numbers here. So direct material used is 80. Prime cost is going to be 4,80,000, and we have works cost. So works cost is going to be 6,80,000 total. We have administration expense. So put together it comes to 8,55,000. Then we don't have cost of goods sold. We have selling expense. So selling expense and cost of production comes to 9 lakhs. Okay, it comes to 9 lakhs. If you want, we can put it on the outside. And the final one is to find out the profit. So profit, he says, it's going to be 25% on cost. Okay, so it's going to be 25% on the cost. So cost is 9 lakhs. So let's see how much it comes to. So that comes to this number. And what is our sales value? Our sales value is 11,25,000, right? So that's about the numbers here. So that's about the sum here. They're asking also cost per unit. So what you can do is you know that the total number of units produced is 3,000. There's no opening or closing stock of units. So simply you can divide all this column numbers by 3,000. So if you want, we can just like show you. I'll work it out so you can understand. So that's about the nature. Okay, so that's about the concept here. So the selling price per unit is 375 and the profit per unit is 75. The cost per unit is 300. Okay. So hope you guys got the idea about this sum. We'll move to our next sum. So this is a little bit different sum where we have to create a cost sheet. Okay, but this is for a tender. For a tender, we have to find it. This is sum number 6. So how we did earlier, it's all about copying the format or remembering the format. So we'll start. So here they say that the accounts of a machine manufacturing company disclose the following information. Material consumed is 1,80,000. Direct labor is 1,50,000. Factory expense is 50,000. Admin expense is 20,000. Prepare a quote for manufacturing a product which requires materials of 2,000 and wages of 1,000. Compute selling price which gives profit of 20% on selling price. Okay, so they're not asking you to find out the cost for this. They're not asking you to prepare a cost sheet. They're asking you to find out what would be the selling price for a tender. Okay, they want to give a quote for this. Okay, and how would we do this? So we'll start. So what we will have is we will put it in a single column itself. We don't need to put like double columns and do it. But what we will again do is we'll try to find out what is that quotation. Okay, the quote value, or what is the quotation value. Okay, that we'll try to find. See, the quotation value here has a direct material cost of 2000, right? And wages it has 1000. And they also say that the only thing that they say that is the profit is going to be 20% of selling price. So they have given the profit. So the profit is going to be 20% on selling price. But selling price itself is not there. Selling price is not there. So we have to find out total cost. Okay, we have to find out total cost. But total cost is not only this amount. You can't like add 2000 and 1000, 3000. There are other expenses also. Okay, how can we say there are other expenses? See, because if you look at here, these two are similar to the 1000, 2000 and 1000, right? These two expenses are similar to this. It means there are additional two expenses that are incurred. Okay, that are incurred. This one and this one are incurred. So it should be a percentage of this, right? You got the idea? If these are given and these are like similar to these, not similar. See, they want a quotation. So we have to give a proportionate cost or something of your factory overheads to this quotation, and we have to get a proportionate amount of your admin expense to your quotation. Okay, so how we are going to do that? To do that, we have to get these numbers. Okay, so the direct material used would be 1,80,000 and labor cost is 1,50,000. Okay, in the sum there is also no cost per unit. So this one is like useless. We don't require that at all. Okay, we don't require cost per unit at all. So we'll find out the prime cost. So prime cost is 3,30,000. Here it is 3,000. Okay, so you guys got up to this. So both sums are like similar. The existing cost sheet and the quotation are now following the same logic. So factory expense is 50,000. Okay, but we have a problem now. Okay, we have a problem now. Here you have 50,000, but here you don't have anything. Okay, so you can easily find out the factory cost or works cost is going to be 3,80,000. That's like quite easy to find. But how will you find it here? How do you find out here is it's based upon a percentage. So 50,000 is incurred. Okay, is incurred. These are factory expenses. So how it is going to be incurred, that logic is up to you. Okay, how do you assume it? Okay, how do you assume it to move? Okay, because the question has not given anything. See, factory expenses could move with the labor expense paid. Okay, I am assuming it to move with labor expenses paid. So let's see. So this would be the proportion. Okay, or this would be the percentage. Okay, so as a part of direct labor, your factory expense is 33%. Okay, so you know this is 33%. Then of 1000, what is 33%? Okay, what is 33%? So we will find out that. So it comes to 330. So what are we like trying to do here? If this cost is going to move like this, okay, if the relationship between factory expense and labor expense is going to be like this, okay, then this also should be in the relative proportion. So we can put it as 33 point few threes. Okay, so if you put here and here, let's see how much it comes to. It comes to 333. Okay, so it has come here. So now we can add both these numbers. So it numbers comes to 3333.33. Okay, so that also we've got. What is our next number? Our next number is administration expense. Okay, so administration expense is 20,000. Cost of production is 4 lakhs. Okay, so how is these numbers related? Okay, so we can say that this 20,000, okay, it could be based upon the 3,80,000. Okay, how did we find out this? see, usually there is no other way, because to proceed this sum, okay, so we assumed that factory expense is going to be related to direct labor, and administration cost would depend upon the size of production. If you produce a small number of, if you're a small company, you will need small administration department. If you're a large company producing large number of goods, you need a large administration expense. So the administration is usually related to the size of the production of the factory. Okay, so the relationship is 5.26 percentage. Okay, so here if you work it out, it is 333.33 into 5.26 percentage. Okay, so this should be the relationship. Let's see the answer. Okay, so you got 175. So let's add both together. We get 3508. 3508. Okay, so that's about the cost of production. See, still here we know, okay, we know up to here. So as there's no other like closing stock number, we can just take this, put it here. What, we don't have any sales expense also. Yes, we don't have any sales expense. What we want is a 20% profit on. So we can find out the profit on selling price. So we have already shown this how it works. So we'll do it once more. So what they saying is, on the sales, okay, 100. If sales is going to be 100, this is an assumption. This is an assumption. Okay, then your profit would be 100 into 20%. Okay, so your profit would be 20. That means your cost should be 80. Right, your cost should be 80. So the number, so assume that you know the number which you know here is the cost. Okay, so what should your profit be? Your profit, to find out, it would work like this. Your profit would be, you know what is your cost? Your cost is 3508, and your cost represents what? 80. And what is your profit then represents? 20. So take this number and put it there and get the answer. Okay, so this should be your profit on selling price. Okay, so now add this number, you will get your 4385. So 4385 is the sales. Okay, so we have found out like how to work out a quotation using the existing cost statement. Okay, so existing cost statement like this, only partial information was given. The other information from here to here we had to work out. Okay, we had to work out based on the earlier cost sheet. So this is about the cost sheet tender.